Good morning, good morning. Nope. How's everybody doing? Good morning, everyone. Happy Friday. Hey, Mr. Mother Truck. Juan, how you doing? Alexander, Lonigan, Raj, Moran. Good morning, everyone. Well, here we are. Another Friday. Another new all-time high. Hey, Mike, what's going on? Mikey, they still haven't lured you back to Wall Street yet, eh? We're just enjoying summer in Oregon. Hey, Jerry, how are you? Mike is our resident math quant 0 and 1 mafia guy who helps us explain how the algos work. Ah, okay. Hey, Rufus, how you doing? One step away from the weekend. One crazy trading day away from the weekend. Oh, here we are again. Um, gosh, the short squeeze meat grinder continues. There's really no relief for the shorts yet. No big liquidating event as yet, unfortunately. It's this market reminds me of asset prices just getting marked up in a private portfolio. You know where the private equity guys just market to market wherever they want. Let's give it a $4 billion valuation. I'm going to get into a lot of trouble for that. But 6507 is the top of this 6468 to 6507 zone. So where's our high? Our high is 6507 half. My level's 3/4. So we're just off by a tick. Now let's see if we get any kind of liquidation down. There's really no need to liquidate down unless we have competitive selling at that high. Overnight inventory is, oh gosh, it's probably around 85, 90% short because you can see most of the trading in the overnight session has taken place above the previous day's close, except for this little chunk right here, right? So let's see what the day brings. You're looking at market profile. I use the blocks sometimes just to show there are going to be places where on retracement we're going to have some buying or potential buying. And that's where these single prints are. If you can see that single block of letters, they're a little bit more clear on the next chart I'm going to show you. But that's under these single prints, there's a short position here, and there's definitely a short position underneath yesterday's high. So there'll be some responsive buying there if we get back down there. Now, unfortunately, there is no overhanging supply up here to sell into this. So nobody's got a cost basis at 17, 27, 37 where the market gets back up there and they're going to sell, right? Hey, Doc, how you doing? So let's see how high we can mark this thing up before we start distributing on the way down. A little bit of liquidation. Now we have a poor high again. And these poor highs have been trapping shorts because what the shorts do is they wait for a poor high to short. And we had one here, now we have one here. The price action is very, very slow, right? Now, the reason why the price action is very slow is because when you're at all-time highs, nobody wants to buy an all-time high, especially with size, right? Nobody wants to come in and buy 5,000 contracts at 65.07 at 2:30 in the morning in New York, right? That's not a very likely scenario. The only reason that would happen is if they were short, a king's ransom and they had to come in and cover. And we are seeing evidence of that sort of covering right now. There is nothing to the left, right? That famous look to the left, look to the left. There's nothing there. There is absolutely nothing to the left. Very frustrating market environment for, a lot of the traders that we have who like to, trade a two-sided market and go short. It has not been that way. Yesterday I talked about building positions. And let's go take a look at our 1-minute chart. So that 65.07 and 3/4 lines up with my longer term 65.07 and 3/4. It's interesting. No, and we just hit it. We actually just hit it to the tick, the upper target. Now let's see what happens. And if you want, if you'd like to figure out how we do these levels, I'm happy to teach you. Come hang out for a month in our room at the Trading Syndicate, and we'll help you. These levels work not only on ES, but on anything. Anything that has an inventory, and that's pretty much everything. Hey Dan, how you doing? Oh, we've got retail sales later. That is still a poor high. It's got one tick of excess. So say you are short. Say you're like, okay, I'm going to put on a short here, right? If you were to do that, just use the high as your stop. Anyone who's interested in shorting this market at all-time highs, and I know people are. Now, I know John's going to come in and he's going to say, why would you tell people to short? I'm not telling people to short. I'm saying if people are short, just use the stop. Don't spend a lot of money on your stop, right? Because what you want to do, remember when you're trading, your job is to keep business expenses low, right? That's what a smart operator does, right? So say you were shorting this level, you're short 6.5, 6 3/4, 7 in that area. You're just going to put your stop at 8, okay? So you don't have to. You don't have to spend a lot of money because if it takes out the 8s, You don't know what's up here. What's that one? Baby Fish SJJ. Sorry, don't understand. Hey, John, there you are. Uh, no, I'm not saying to short. I'm saying if you are short because we have a lot of gun to the head shorts here. You know, every market, um, you know, even if you tell people not to short, they will short it. So for those of them who do, you don't want to spend a lot of money on the stop, right? Now we're offered above 7 3/4. Let's see if we get a print at 8. There's an 8 print, right? See, there we go, right? I told you. I told you, right? Look, Mike short, 6 6/4, stopped out at 8. Exactly. It could have been a look above and fail, right? He took the shot, right? He took the shot, right? Let's see what we do now. Now that's a proper high. That's 2 ticks of excess according to Dalton and Stadelmeyer. There's the look above. Now let's see if it fails, right? Unfortunately, in this market, what it does is it does this thing called the look above, screw around, and then fail, right? It looks above and then it messes with your head here, and then eventually it fails when you get enough sellers competing. But boy, does it take time to get selling competition. Still the front end, right? We're still in the front end of this move. So any kind of short that you take here is going to be what I call a hit and run short, right? Where you're not allocating a huge amount of time and capital to it. Is trading about taking the shot? It is if it's an educated shot based on business. So Mike's theory, John, his thesis is that we are at 2 times cost basis and that he's looking for a seller there, right? And if he doesn't find a seller, right, like he did now, he's turned around and gone long, right? For me, because I'm a cheap old bastard, is that I refuse to put money into the market unless I see some clarity, right? When the market's working out a level like the top of 2 times cost basis, right? I kind of want to know where the sellers are and where the buyers are. I'll let other people get chopped around in here. The reason why this is not clear is because it's an all-time high, and the large traders are working this area out, and the order flow is not reliable. It's like a little bit of turbulence. It's not laminar. It's not smooth. It's definitely not predictable, right? So when things are very difficult to predict, so you got all-time high, right? Number 2, right? Let's look at, how about this today, folks? Let's do some education about the market conditions under which you're trading, how to look at them, because most people don't know. They have no clue, right? So you have an all-time high, and now it's 2:45 a.m. in New York, right? Before the London Open, right? And there's no overhanging inventory, right? Nice work. Well done, Doc. right? So you have these three things to consider. Now, price action. Is it slow or is it fast? I'm getting to that, Mike. You're jumping ahead. So price action, slow. Follow through, right? Follow through to the downside is limited, right? Exactly, right? So given all of this, what are you kind of looking for? Are those great trading conditions? It's like you have a sailboat and you're taking it out on the water, but there's no wind. Bit difficult, right? It's a bit difficult, right? It's very important to assess the market conditions when you're taking a trade, right? Because now is going to be different than 2 hours from now, right? Or near the open, right? Right? Exactly. That's great, Alexander. That's really good. Well done. Someone is listening. Well, love to see it. Right? I love it when people listen. It's great. Well done. So all of that is, do I really want to commit capital? There's a lot of videos. There's more to come. I'm still working on the longer term trade thing. I just had some health issues this week and last week, so it'll get done. Hopefully I can get it done this weekend. Oh. See, now the problem with this kind of price action, right? The problem, 1 out of 10? Sorry, Moran. Oh, 1 out of 10, yeah. Listening. The problem with this kind of price action, because it's really slow, but what if a large trader comes in and has to cover a short position? That's when you get that large spike up. Here, right, we can see that there are sellers right here at 8 quarter. You have an observation. Even though it isn't at the edge, it looks like the level at 530. Oh, no. No, definitely not, John. You're thinking about this level right here? Yeah. Yeah. No. After the fact, those trades look great in hindsight. Those are beautiful hindsight trades. And if you were on the ball and you took it at 2 and put your stop under 1 1/4, yeah, sure, it worked in hindsight. But at the time, eh, I really, I limit the amount of trades I take. So I don't take that many shots. So I want to take shots that don't drain my equity. All-time highs, and I'll say this till I'm blue in the face and until anyone actually listens. All-time highs are the worst trading environment for retail traders. Now, why is that? Because you don't have active sellers. Right? For a retail trader, the best kind of market is a market that has two-way price action, buying and selling. So when a market just keeps getting marked higher and higher and higher, that's very hard to trade because there's no back and forth, right? Yeah, the easiest trade definitely, Doc. Yeah. Like you went with the trend, right? You opened it on the night shift, now you closed it out, you took the money, right? And just like that old, was that song by Steve Winwood, Take the Money and Run, right? Now that you've got that money, don't give it back. I'll be very, yeah, I mean, yesterday I wasn't feeling good, so I didn't take any trades at all. I'm much better today, so I'll probably be a bit more active. Was it Steve Winwood? Steve Miller. Hey, Johnny, how you doing? How are the Philippines treating you? You like your new home? It's so unpredictable, right? Yeah, I never see easy money. He says that a lot, but I never say easy money. Oh, you're back in Guam? Okay. See how it's looking below and looking above and looking below and looking above, right? Just stay out of it right now, right? The most important thing you can learn as a retail trader is when not to stick your head in the alligator's mouth, right? It's really one of the most important things that you will learn. There is a time to do business and there's a time where you just stay the hell out. And at all-time highs, the amount of opportunities that you have is reduced. And you have to make peace with that, right? I mean, we found that after COVID. Gosh, when the market started rebounding and making all-time highs, people were just throwing money out the window trying to short it, and then they'd get long at the wrong spot. Oh, it was just a mess, right? And here we are again, where every week, we keep putting in all-time highs. Frustrating, yes. Yeah, very frustrating. But it is our job as traders to work through the frustration, right? We don't have a choice. That's why we really want to make hay when the sun shines, you know. And that's why it's really important to protect your profits. You know, don't overtrade these markets. Hey, Omen, how you doing? You also have to remember, Mike, you know, we are right in the middle of summer, right? Does it take most a while to do that? Overtrade it? Does it take... Sorry, Dave. To stop it? Once you understand what's going on, it's easier to stop. And this is why I'm such a big, you know, this is why I'm always talking about the business, right? It's almost like I never shut up about it, right? I'm always like, you know, because if you understand the business, and here's a really quick little hint, right? You get these barcode patterns, right? Just leave that stuff alone, right? I have videos in the room about pre-trade checklists and all that stuff, right? Let's see what happens when London opens. There's London. 2 ticks, not much action. I think London went to the pub last night. Now, we're watching the low of K at 4 3/4. Let's see what happens if we get down to 4 3/4. It's not ready to go down just yet. Also remember that we're in distribution now, right? The point of control is here at 6,500. So we'll try and move that up and print 1,100 contracts here. Perhaps there is a possibility after we move that inventory that we'll get a little bit of a sale. Most of the European public is on holiday? Oh, okay. I did not know that. Yeah, so John, for example, when we're looking at this, you know, we're really focused on really focused on, hey, we've got to trade from the edges, right? Oh, thanks, Alexander. Assumption Day. Okay. Alrighty. Good to know. Overnight inventory about 89% long. No signs of correcting yet. The bids. Look at the bids coming in, Mikey. Right? Sellers stop selling here. Yeah, but I know why you're asking, John. I just don't think after the fact it looks great, right? For you right now, you really want to limit the number of trades you take, and only from the edges. Do I think a lot of this is margin desk stuff? Oh, you know, I don't think there's a lot of buy-ins happening now, Raj, because it's 3 in the morning. But I think that there'll be a lot of traders trying to cover before they get bought in, right? Because when you get bought in, right? Yeah, no problem, John. When you get brought in, right, the process is out of your hands. And margin clerks have the finesse of a baby elephant, right? Margin clerks just trample into the markets. They're not finesse traders, right? Yeah, and I'm not the only one who says it. Walter Deemer, who's been around on the street before I was born, he's the first one who says, margin clerks are not finesse traders. So they're not going to work a buy-in. They just go and start buying. And then, everybody sees them coming and price just gets ripped higher. Oh boy. Right now, Mikey, I'm not looking for a short. I'm not looking for anything right now. Honestly, Mike, right now, at this particular time, and I'm going to get into trouble and people will drop off the stream, I'm not looking for a trade. Right? So you went short, then you went long. What did you learn from that? Like given the conditions that you're looking at, maybe it would be better to wait for that A plus setup. right? It's not here right now, exactly. Of course, we're going to be looking for a correction to overnight inventory. Based on the London Open, when L period could not take, and you don't need market profile to tell you this, when this half-hour bar could not take the low of that half-hour bar, that overnight correction is not happening now. Maybe in an hour, you know? It's just so choppy with zero follow through, right? So let's talk about this, right? Let's make this worth your while for tuning in, right? What kind of business conditions exist right now? Is this a retail market for retail traders, or is this a market for wholesalers to make money? Is it a retail or a wholesale market? Because if you understand the difference, then you know when to keep your hand on your wallet. It's a wholesaler's market, right? There's no opportunity for retail. So then you go to the gym, you go for a walk, go feed the cats, you know, right? You know, this is when I started trading, you know, there was this old trader from, I think it was from Ween Securities or Meyerson. He came up to Vancouver and we were talking, you know, and we were talking about wholesaling and making markets. He goes, listen, kid, just put 1,000,000 shares on a bid, put 1,000,000 shares on the offer, and let them bang away between you, right? Hey, Ed, how you doing? Right? He's like, listen, kid, just put 1,000,000 shares on the bid, put 1,000,000 shares on the offer, and let the sheep just bang around in between. You make the spread when it's slow. That's what's going on, right? So that is not a business transaction that's available to us because number one, we don't pay for order flow. Number two, we don't have the capital. Number three, we don't have the technology. And number four, we're not designated market makers. So all of those things, right? That type of business is not available to us at this time. So we have to wait for when business conditions suit our capital, our skill, and the type of trades that we take. Now that is pretty, it's simple, right? I'm looking for this point of control to move up. We still need another 100 contracts here at 6.5. Yeah, exactly, John. Margin clerks and large traders are in at that close at the end of the session. That's where all the volume is. That's where all the liquidity is. So if you need to move size, right? Actually, not correct, Alexander. The choppier the market is, the slower the business is. Pretend that you're a Alexander. Have you ever gone into 7-Eleven or Walmart at 3 o'clock in the morning? That's all it is. Slow. You know, John, the funniest story is we had Damon Pavlodas on our podcast. He's Linda Ratchke's husband, and he used to trade for Paul Tudor Jones, and he was one of the largest ES traders on the floor. And he would do all his business at the close, and people would be like, his buddies like, I'm going to short the close, And he couldn't say anything because maybe he had a huge size buyer. He'd go, "Why don't you just go home for the night?" Maybe it's, maybe just go home. Oh. There we go. Point of control moves up. Okay, so we've moved our inventory from 6,500 to 6. Now, is there any chance that we might have a little sale? We're going to go test that 6504 and 3/4 again. See if we can get down there. Yeah, she's married to Damon Pavlatos. They've both been on our podcast. Sorry, Ed. She's taken. Yes, we do. Thanks, Raj, for reminding me. There's that little short position here and here. It's because of Linda Raschke that I actually got my first job in the market, because I read what she said. If you want to get a job in the market, go get a job close to the exchange and start networking. She said that in the first Market Wizards, and I read that. And that's exactly what I did, and that's exactly how I got my first job. So look, we have a little bit of a sale. Hey, we took a stop by one tick. Call the newspapers, right? I'm not short. Yeah, if it holds that 4, John, it'll rotate up again, right? Let's see what happens. We haven't had a meaningful liquidation all night. Oh, nice, Omen. There we go. Ho ho! A 2-tick stop run. Beautiful. Come on down to 4. So in this case, after the point of control moved higher, we actually had a sale. So in this instance, the premise held true. Now, if anybody keeps stats, I would love you guys to keep stats on what is the percentage of times after a point of control moves higher do we have a sale. Exactly, Mike. Exactly. The POC moved up from 65. Yeah, it was 1,142 contracts here, right? And it moved up to here. And only after it moved up did we get that liquidation that we were looking for. Right? So we learned something tonight. Now you want to track that. Why? Because, John, the wholesalers moved all the inventory that they had, or 70% of it. So after 70%, right, now you'll get selling competition to get rid of the rest. Right? You know what, Omen? I can't say that your strategy is viable or not until I look at it and test it a couple of hundred times. Right? On paper, looks pretty good. Right? Now it's all dependent on the order flow. So what's your execution strategy around what that statement says? DM me, we'll go into it. I'm curious. Got to be open-minded in this business. You learn something new every day. No matter how long you've been doing it, you'll always learn something new. Ah, there's that 4 bid. Now let's see when we get up to 6.25, do they sell into it? Yes, unfilled offers create resistance. Exactly. There's 6.25. Do we have a seller? When it's slow like this, I know it's not the greatest trading environment, but it's a great learning environment because everything's moving so slow. You can see it, right? And then you can test out theories and watch, be observant, approach the market from, approach a market from a curiosity standpoint. It will really help you. Should go back to 6507. Yeah, exactly, John. The sellers are right here, right? See the top of these candles? Yeah. Yeah, now you're cooking with gas. A little quick hit and run short if you did take it. I had a decent day on Monday and Tuesday, and basically what I'm doing is I'm protecting the money I made on those 2 days in the last 3 days. Yesterday I wasn't feeling good. I took 3 scalps, two of which I kind of screwed up, and one was okay. I didn't make any money. It was kind of a net flat, right, other than commissions, right? So today I'll be very careful. Now, Mikey, we did correct inventory, but not significantly, right? Remember the shorts are trapped under 6502, that little green bar here, where we have those single prints, right? So watch out for that. And John, Mondays, so it's good that you said that because what you want to do on Mondays, especially in these markets, at this time in finance, we really, really want to like be careful trading on a Monday, right? You'll know that now. You'll know that now. Hey Jimmy, how you doing? Right? Let the market, because here's the thing. We don't set the business agenda, right? Larger traders do, right? So we as retail traders, we're always trying to figure out the agenda. And sometimes it's best to let the large traders show us. You know, it's like my analogy. You go out to dinner with your friend who's just made $300 million on a deal. He takes you to a fancy restaurant. When the check comes at the end of the meal, right, you quietly disappear to the bathroom. Or you get alligator arms, right? It's exactly what it's like in these markets. There are times when you want the big traders to forge the path to pay the bill, right? And that's where you get alligator arms and you sit back and watch. So this little liquidation, how do you view that in a business sense? Well, you ever been in Walmart or any kind of big store and they go, hey, attention Walmart shoppers, for the next 10, 15, or for the next half an hour in aisle 17, right, uh, Fiddle Faddle is on sale, 2 for 1, right? So everybody runs to aisle 17 to buy 2 for 1 Fiddle Faddle. After a half an hour, they raise the price back to normal. And that's exactly what that is because it drums up interest, right? You move the POC up, you've sold a good amount of your inventory. Now you start putting it on sale. Everybody else puts it on sale. That creates selling competition, which lowers price. But then when you get down here, those buyers come running in, right? Do they still make Fiddle Faddle? I haven't had it in about 3 decades. It's probably not the healthiest thing to eat. I don't know why it popped into my head. Anyway, more distribution now, Mike. Do they still sell it? I'm not allowed to eat it anyway. Anyway, folks have any questions? Good stuff, Mike. Do you use 100-day POC ever? No, I've never even heard of that. What is that, James? What is it, like a composite profile of 100 sessions? Oh, interesting. No, I've never even heard of that. I'd be interesting to see what it looks like, but I've never heard of it. Taking the night off? No problem, Dave. Let's talk when you have time. My earlier observation applies to 6504, not an edge. There is a level. You're right, John. Right? Once you get comfortable with that look below and fail, yes, that is a viable trade. Right? We want to try and get you comfortable with those trades. So definitely later on, like Moran, she takes the trades from the middle when they're very clear. Okay. Well, folks, thank you so much. Really appreciate everyone being with us this morning at the Trading Syndicate. Come join us. It's less than $1 a day, and I promise you'll learn more in a month than you will anywhere else. Just make sure you reach out to me when you join, and I'll help you through it. Thanks, everyone. Have a wonderful, wonderful trading day. If I don't see you later on, enjoy your weekend. Is it useful to mark the closing price of the last day of contract end? It may be, Alexander. I've never done it. So, um, hey, give it a shot and see if it works. Right? That's my thing with all of these questions that I have no experience with. Definitely give it a shot and see whether or not it works. Track it over time. Because I'm always open to new things, but I don't have time to track everything, you know? Definitely give it a shot. Thanks, everyone. Have a wonderful trading day. Have a great weekend if I don't see you. And we'll see you at the next session at 9 o'clock Eastern Time. Thanks, folks. Bye for now.